Greetings to you all. So last time we're looking at the RSI indicator. As you can see, it's still on our chart. We used the RSI indicator as we did in the previous video to identify the market conditions when the item you're trading is oversold or overbought, and also we looked at how we can use it to confirm the market trend. So today we're going to be looking at a particular indicator that will help us identify price levels at which we can enter and leave the market. So after having identified the market condition, that is overbought and oversold, so today I'm going to add on another layer of evidence in order to press successful trades with less risk. So if you haven't subscribed on YouTube, consider subscribing. You can go ahead, like and share with a friend as we continue to build our layer of evidence so that we can make successful trades with less risk. So the indicator we're going to be looking at today is going to be called the Fibonacci retracement. The Fibonacci retracement is going to help us identify price levels at which buyers and sellers were entering and leaving the market. So depending on these price levels, we are going to also enter the market as many traders also will be looking at this significant position to open their position or close them. So remember, the winning side is the one is where the market will go. So if buyers are more, of course, they'll take the market up. If sellers are more, they'll take the market down. So in order to add a Fibonacci retracement to our chart, just come here. This is MetaTrader 5. So we're going to do a swing from here to here. So first time we look at Fibonacci retracement, you can see it has numbers 0, 23.6, 38.2, 50, and 61.8. So we shall be looking at 3 of them. Those are the levels that are significant in Fibonacci. That is 23.6, 38.2, then 61.8. You can go ahead and read about Fibonacci. Fibonacci applies a lot in our daily life, even across other fields. You'll find some theories explain about Fibonacci. So you can go ahead and do research about Fibonacci and how you can utilize it more in trading. So today I'm going to be looking at it as an indicator to help us identify the price levels at which the price found resistance and at which the price found support. So we're going to draw our horizontal lines at this particular level. So we have a 23, 23.6, then we have 38.2, 38.2, and 61.8. 61.8. So as you can see, we have drawn our price levels. These are the only 3 significant levels we shall look at in Fibonacci. So as you can see, even if you look at previously, the price was reacting significantly when it came to these price levels. For example, you can see here 61. You can see how it was reacting here, even here on 38.2. You can see here how it broke, then I found this as a resistance again. Specifically, you look at only these price levels when looking at support and resistance. So for example, here the market has been uptrending, as you can see. Also it is above the 60 period moving average, so we are certainly sure that the market is in an uptrend. Also you can look at our RSI indicator that really, yes, the market since a few days ago it crossed the 50 level on the RSI and has maintained that level for some days. From I can see from 28 it is above, so you can certainly sure that it is uptrending. So how do we use Fibonacci retracement? So as you can see, we have 23.6 and the price is currently above this. So this price has been uptrending. As you can see, it has been uptrending. So what do we expect? We expect a collection here. As you can see, it is now down trading a little bit. So as you can see, we expect this price to come from here, come test this, then to test, and after continue with the movement like this to this side. But if it comes, then breaks through this and goes this side, okay, And then, so if it breaks this side, we expect it maybe this is no longer valid support, so we expect it to act as resistance, and it comes this side. So it's expected to test here and come back here, find this as new resistance if it breaks this, and the price to continue downwards this side. So specifically, that's how we're going to be looking at this. So we expect this price come test here, then when test here, it's going, this 23.6 is going to act as support, then it will be given support and continue in the uptrend. But if it breaks this one is no longer considered valid support, so we look at it as resistance. It may come here maybe halfway, not until it reaches this 38.2, then come back and test this as resistance. So if it doesn't break this, that means there's a shift in the trend. Remember, it has been uptrending above the 60 period moving average. So if test this breaks, then we expect to find here some resistance. Once it breaks this, that means it's also no longer valid. So crosses this, then we expect test this again as support. So if test this and comes down, so that means the trend has changed from an uptrend to a downtrend, and it must be at least showing that it's going to go below the 60 period moving average. So you can use also other things to identify the trend, and use them, all of them. So depending on how you're building up your strategy, but specifically that's how we use the RSI indicator to identify at which price levels to enter or leave the market. So for example, if I was looking at this, I would for example, now I don't have any position open. I could just open a position when it comes here and test this. I could open my position here and expect to go up. If test this, I could be sure that it's going to go up. I open a position and hold my position and look at it and wait until I've made some profit and then close off my position. So that's how we use the Fibonacci retracement to identify the support and resistance levels in the market. So next, we're going to be looking, in the next video, we're going to be looking at something very special that gives you the final indicator that yes, it is going to continue. Hold your position and wait until the price reaches the next level. So see you in the next video. Thank you for watching.